Good morning, all of you. So in last lecture, we have completed cross transfer, right? And we have seen examples. Today we are going to start with next topic, module 3, set off and carry forward of loss. What is the meaning of set off and carry forward of loss? It simply means to set off loss from one source of income or one head of income from another source of income or from another head of income. Let me give you example. For example, I am facing loss in house property. Let's say 1,20,000, and I am having profit in my business. Let's say 5 lakh rupees. So it is adjusted, and my gross total income will be 3,80,000. This is what set off of one loss from one head to another head. This is your head number 2, house property head, and we set off the loss of house property head from business and profession. Now let's take another example. Let's say I have 2 houses. Okay, I have 2 houses, house 1 and house 2. I am facing loss in one house property, let's say 1,20,000, but profit in another house property, that is 2 lakh rupees. So this will be set off, and my net income, total income, will be 80,000 rupees. This is inter-source. This is inter-source adjustment. Sir, how inter-source? One source of income only, we have used only one source of income, that is house property. We can take another example, that I have one business in which I am facing loss. Let's say 1,20,000. But I have another business in which I have profit of 2 lakh rupees. So it will be set off, and net result will be my gross total income. It will be my gross total income. This is what inter-source adjustment. We are not using another head, okay? We are using the same head of income to set off the loss. Let's get into this. Set off and carry forward of loss. Now, what is the meaning of set off and what is the meaning of carry forward? Set off means to adjust your loss from your profit in same year. I am setting off my profit from I'm setting off my loss from my profit. That is set off. But sometimes it happens that you will not be able to set off your full loss. So it will be carry forward. Carry forward means to carry forward for next year. And if in next year I have profit, then it will be set off from next year profit. Three things that we are going to learn in this topic, that is inter-source set off of losses under the same head of income, inter-head adjustment, and last point, carry forward and set off of brought forward losses. First, we try to set off our loss from inter-source. Inter-source means, I have given you the example. From one business, I am facing loss. Another business, I am having gain. So it will be set off. And net result will be my gross total income. So this is inter-source. I am not using another head's income. But if I am not having second business, but I am having house property in which I am having profit of 2 lakh rupees, then it will be set off. And my net result will be 80,000 rupees. This is inter-head. This is inter-head. This is example of inter-head adjustment. Let's discuss one by one. There are so many things to learn. Well, concept of set off and carry forward of losses. Specific provisions have been made in Income Tax Act 1961 for, yes, Deepak. Is there any doubt? Chalo. Specific laws have been made in the Income Tax Act 1961 for set off and carry forward of losses. In simple words, set off means adjustment of loss against the profit from another source or another head of income in the same assessment year. If loss cannot be set off in the same year due to inadequacy of eligible profit, then such loss are carried forward to the next assessment year for adjustment against the eligible profit. What does that mean? It means, for example, I am having house property income of 80,000 rupees only and 1,20,000 loss in business and profession. So now what to do? I am facing loss. So now this loss will be carry forward to next year. If in next year I am having income, then this loss will be set off from that income. Okay, this loss will be carry forward. That is what written over here. If losses cannot be set off in the same year due to inadequacy of eligible profit, then such loss are carried forward to the next assessment year for adjustment against the eligible profits of that year. The maximum period for which different losses can be carried forward for set off has been provided in this act. Sir, for how many years this loss will be carried forward? So it is given in this act. We will discuss later on in this chapter. Okay. So let's begin with first point, inter-source adjustment. Inter-source adjustment means under this head, losses incurred by the SSE in respect of one source shall be set off against the income from any other source under the same head of income. This is the most IMP, under the same head of income. Same head of income means I have given you the example of business 1, business 2. Business 1, business 2. One business I am facing loss, another business I am having income of 2,50,000. Then my net result will be 1,30,000. This is inter-source. I am not using another head's income. Okay. Since the income under the each head is to be computed by grouping together. Grouping together means they will be grouped, and the net result of the activities of all sources covered by that head. In simpler terms, loss from one source of income can be adjusted against the income from another source, both the sources being under the same head. Sir, please give the examples. Look, loss from one house property can be set off against the income from another house property. The same example I have given to you here. One more example, loss from one business, say textile business, can be set off against the income of another business, let's say printing business, in the same year as both these sources of income fall under the one head of income. Now, here I have written business 1, business 2. Instead of, let me write down textiles business. Here, printing business. So, in PGBP, profit and gains from business and profession, I am facing loss in textile business, but I am having income in printing business. So it will be set off and net result will be shown as gross total income. Therefore, the loss in one business may be set off against the profit from another business in same year. Chalo, is it clear till this point? What you are going to learn, set off and carry forward of losses from inter-source, from inter-head, and carry forward of losses. We learned how to set off loss inter-source. Loss from one source to another source, but same head. Chalo, is it clear? Okay, I will repeat this point. But rest of the students, what's the status? Is it clear or not? Chalo, I won't reply from all of you. Uttam, chalo. We have started topic number 2 of module 3, that is set off and carry forward of losses. Set off and carry forward of losses is mainly divided into 3 parts: inter-source set off, inter-head set off, and carry forward of losses. Now, what is inter-source? Inter-source set off means loss from one source, that is PGBP. Profit and gain from business and profession will be set off from profit of another business, but same head. Same head means PGBP. Profit and gain from business and profession. That is set off of losses from same head. Intersource. You have two sources of income. One is textile business, another is printing business. So you are setting off the profit from one business to another business. So the net result is 1,30,000. Similarly, you can set off the house property if you have loss in one house property income and income from another house property income, then you can set off both the income. Chalo, where are you guys? Uttam, is it clear? And rest of the students? Deepak, Dilip, Devangi, Soumya, Krish. Is it clear or not? Chalo. Are you there, Krish? Devangi? Devangi, are you there? Soumya? Krish? Hello. We have completed till this point. Example number 2. Now, there are certain impermissible intersource set-off. Impermissible intersource set-off means you cannot set off this loss with another income. Intersource set-off, however, is not permissible in following cases. Which type of cases? Look, long-term capital loss. Short-term capital loss is allowed to be set off against both short-term capital gain and long-term capital gain. Please mark these words, okay? This is most IMP. MCQ 1 mark question can be asked. Short-term capital loss is allowed to be set off against both short-term capital gain and long-term capital gain. However, long-term capital loss can be set off only and only against long-term capital gain and not against the short-term capital gain. This is most IMP line. Sir, what is the meaning of this? Let me write down here. For example, in capital gain, I have short-term capital gain and long-term capital gain. 20,000, 30,000. Then my total income is 50,000. Gross total income is 50,000. Now, as here written, short-term capital loss is allowed to be set off from long-term capital gain. For example, I am facing loss, short-term capital loss of 20,000 rupees. So this 20,000 rupees will be set off from long-term capital gain. This will be set off from long-term capital gain. But, next line, if I am having long-term capital loss, then it can be set off from only and only long-term capital gain. Reverse situation. Let's say here I am having 30,000 and I am having minus 20,000 in long-term capital loss. Here gain. So this will not be allowed as set off. My total income will be 30,000 rupees and carry forward amount will be 20,000 rupees. I will allowed to carry forward this amount. This will be carry forwarded. This loss will not be set off from short-term capital gain. Though both are inter-source. Look, this is inter-source from one head of income only. I am having short-term capital gain and long-term capital loss, but it can't be set off. Read this line. I have highlighted. Long-term capital loss can be set off only and only against long-term capital gain and not against the short-term capital gain. It cannot be set off against short-term capital gain. We are right now talking about inter-source only, okay? Only inter-source from one source only. We are not talking about inter-head. Inter-head means income in business and profession and loss in capital gain. So it will be set off or not. That we will discuss later on. Right now we are learning inter-source only. Inter-source means from one head of income, there is profit and loss, both. Then it will be set off or not. Sir, I am having long-term capital gain of 30,000, then it will be set off. And net result will be 10,000. Both long-term. Then it will be set off. But if I am having short-term capital loss of, let's say, 2 lakh rupees and long-term capital gain of, let's say, 5 lakh rupees, then it will be set off. Why? Because short-term capital loss can be carried forward, set off with both long-term and short-term. But long-term capital loss cannot be set off from short-term. It will be set off from long-term capital loss or long-term capital gain only. 1 mark question definitely will be there from this question, from this point. Short-term capital loss is allowed to be set off from both, but long-term capital loss can't be allowed to be set off from both, as it will be set off from long-term capital gain only. Are you getting this? Hello, give me the answer now. Short-term capital gain 50,000 rupees and long-term capital loss, let's say 30,000 rupees. Will it be set off or not? चलो, short term capital gain, long term capital loss from one head. चलो, I want to check who is replying quickly. Okay, so many replies. Okay, Uttam and Jaideep. That's incorrect. Rest of the students, you are right. Mechalius, DVS, Uttam, Stephanie, Krish. Hello. Short term capital loss 50,000. Long term capital gain 1 lakh. Will it be set off or not? Hello, read the question. Short term capital loss 50,000 and long term capital gain 1 lakh. Will it be set off or not? Okay, Mechalius, DVS, Prince, Uttam, Jaideep. Steve. Okay. Let me give you one question. Short term capital loss from shares. Long term capital gain from sale of building. Short term capital loss from sale of shares. That is, let's say 75,000. Long term capital gain from sale of building 1 lakh rupees. What is the total income? So I got only one, two reply. Chalo. So all of you have given the correct answer. So I think you know the concept now that short-term capital loss can be set off from both short-term capital gain, long-term capital gain. But long-term capital loss cannot be set off from short-term capital loss. Short-term capital gain, yes. Similarly, next point. So we are learning impermissible set off, okay, inter-source. So first, long-term capital loss can't be set off from short-term capital gain, inter-source. Now speculation loss. A loss in speculation business can be set off only and only against the profit of any other speculation business. Now, for example, I am having any speculation business and I am facing loss. So that loss cannot be set off against any other business and profession. But if I have two speculation business, I am facing loss in one speculation business, then I can set off that loss from another speculation business profit. But if I want to, let me give you example over here. Let's say business and profession. Speculation business and other business. Okay. For example, I am facing loss in speculation business, let's say 20,000, and I am having profit 50,000 in another business. So will it be set off? Answer is no. Your profit will be 50,000 and you will be allowed to carry forward this 20,000. But if in first speculation business, I am facing loss and another speculation business, I am facing profit. I am having profit. So will it be allowed to set off? The answer is yes. It will be set off and nothing will be carry forward. Nothing will be carry forward. Okay. So 20,000 loss, 50,000 profit will be adjusted. However, losses from other business can be adjusted against the profit of speculation business. Now, this is important. Loss from other business. Let's say other business, I am facing loss of 20,000 and speculation business, I am having profit. So now this will be set off. This will be set off. But if I'm trying to set off speculation loss, then it is not allowed. It means speculation loss can be carried forward or can be set off from speculation business only, but other business loss that can be set off from any business, whether regular business, other business loss from one activity that can be set off from another regular business also, that can be set off from another speculation business also. But if I am doing speculation business and other business and I am facing speculation business loss, then it can't be set off. Then it cannot be set off. I think it will be clear. A loss in speculation business can be set off from speculation profit only, but loss in other business can be set off from any business, either from regular business or from speculation business. Now, what is speculative business that we have learned in last semester, like derivatives, hedging, derivatives, share trading? This type of business are speculation business. Third point, loss from activity of owning and maintaining horse race. Such loss can be set off only and only against income of activity of owning and maintaining racehorse only. Chalo. Now, I have only one business, that is horse race. So, this loss, for example, I am facing loss of 50,000 rupees. So, this loss cannot be set off from any other business. This will be set off only and only against horse race income only. This can't be set off from any other business. Very simple. Such loss will be set off and carry forward, and it will be allowed to be set off from only and only horse race business, owning and maintaining horse race or race horses. Is it clear? Speculation business, I have given the example. Is it clear, Divyesh? Is it clear or not? Okay. Horse race clear? Okay. Chalo. Losses from specified business. A loss in any specified business referred to in section 35 AD. Now, what is section 35 AD? Last module of last semester. There are 13 businesses which are considered as specified business. Remember? Operating warehouse facility for storage of sugar, agricultural produce warehouse facility, then cold chain facility, in which 100% set off means 100% expenditure can be allowed. Then operating hospital with minimum 100 beds. So these are the examples of section 35 AD. In last semester, we have learned this in detail. Loss in any specified business referred to in section 35 AD can be set off only and only against any other specified business. However, losses from other business can be set off from specified business. So now, any loss in section number 35 AD, then it can be set off from that specified business only. But if you are facing loss in other business, that can be set off from specified business. So if you check here, loss from other business can be set off from speculation business. Here also, loss from other business can be set off from specified business. It means if you are doing regular business and you are facing loss, then it can be set off with any other business, whether it is speculation business, whether it is specified business. But If you are doing speculation business and loss, then speculation business only. If you are doing owning and maintaining horse race business, then it can be set off against horse race business only. If you are doing specified business, then it can be set off from specified business only. This is very short and sweet definition. Speculation loss, speculation business only. Horse race loss, horse race business income only. Specified loss, specified business only. I think it will be clear. Last point of intersource, that it must be noted that loss from an exempt source cannot be set off against the taxable source of income. Now, what is the meaning of this point? For example, agriculture business. Agriculture business income is exempt. If I am having agriculture loss, agriculture business loss, loss from exempt source, 50,000, and in other business I am having profit of, let's say, 90,000. So will it be set off? The answer is no. Profit will be 90,000 and amount carry forward will be 50,000 rupees. Amount carry forward will be 50,000 rupees. Why, sir? Obviously, this is not taxable amount. You are not going to pay any tax, but in this amount, you have to pay the tax. And if you set off your taxable amount with exempt amount, then your gross taxable amount will be lower. It will be decreased, na? So government can't let that happen. That's why 90,000 will be the gross total income. I think it will be clear. So this is all about inter-source adjustment. Let's recap. Inter-source adjustment, it means from one source of business to another source, but in same head. Impermissible. Long-term capital loss can be set off from long-term capital gain only. Speculation loss can be set off from speculation business only. But other loss can be set off from speculation business income. Racehorse loss can be set off from racehorse income in future only. Losses from specified business can be set off from specified business income only. Specified business means those which are covered under section 35 AD. Maintaining of hospital with 100 beds, cold storage facility of agricultural goods, cold storage facility of other activities like sugar. So many things are there. 13 or 14 business are there. Okay, you can Google it out if you forgot. But loss from other business can be set off from losses from specified business. Clear? Is it clear or not, class? Chalo. This is all about inter-source adjustment. 1 mark, 4 mark question will be there. Inter-source adjustment. In your 5 module of this semester 5, module 3 and module 5 are easiest. Module number 1 is capital gain. Module 2, income from other sources. Module 3, set of carry forward, clubbing and deductions. Module 4, TDS. And module 5, income tax return filing. out of these 5 modules, module number 3 and module 5 are easiest. Okay? Chalo. Interhead adjustment we will discuss in next lecture. If you have any doubt, then please raise your doubt. Otherwise, all of you are requested to write down your enrollment number. Okay? Thank you.